the daily chart is showing signs of churn. We just want to explore that in a little bit more detail. Just before we get into the analysis, just going to go ahead, bring up our disclaimers, and just starting off with a high risk investment warning. I'm going to keep this on screen for a few moments if you can take the time to go through that. Okay, thank you very much. And here is our market commentaries disclaimer. All right, and let's go through to our DAX. What we want to do is let's just explore the DAX daily for the time being. So that's this chart over here. And what I want to show you is where the churn is, or the signs of the churn. So what we'll do is we'll use arrows. The first arrow I'm going to do is I'm going to place it over here, and you can see this is going back to Friday's candle. We've got the lowest low in at least 3 candles, and this is a selling tail, so to speak. And then what we have is Monday's candle really closing above the high of Friday's reference candle. That's bullish. We generally need these type of signals for a swing to occur, right? But what subsequently happened is that bullish reference candle was cancelled, negated. Here we've got a reference candle, except it's got a selling tail to it. So it's the highest high in at least 3 candles. And then what happened is that yesterday's candle closed convincingly below it. So we've got some upward pressure from Friday's price action, and then we've got some downward pressure from yesterday's price action, and effectively it's showing churn. It's we don't have a dominant swing just in. To be fair, the last reference candle is to the downside, and we just got to see if that is going to evolve into some sort of downwards movement. Another way that we can look at this is using Bollingers. Okay, so just bear with me. I'm going to bring up the Bollinger indicators, but we're going to use 2. So just click on your indicators button here, and then just go ahead and double click on your exponential moving average. I beg your pardon. What we want to do is we want to go to Bollinger's. All right, and just bring in 2 Bollinger Bands. Okay, so the first settings is as follows. We just double click on the Bollingers. We'll take out the basis. The inputs, make it 20, and standard deviation, just make it 0.75. And what we'll do is we'll make the upper a royal blue, the lower a royal blue as well, and just take out the background. Okay, so that's the first Bollinger Band. Let's just do the same thing with the second Bollinger. Keep it at 20 and 2, and take out the basis. We'll make the upper red. We'll make the lower red. Okay, just take out the background. And we don't need these EMAs. I put those in mistakenly. All right, so what we've got here are effectively 3 zones. We've got zone 1, that's between the upper blue and the upper red. We've got zone 2 between the blues, and then zone 3, which is the zone between the lower blue and the lower red. And what you can see is when the index is in zone 1, it tends to trend. Okay, it tends to trend upwards. If we go into zone 3, then we have a bias to the downside. When we're in zone 2, which is where we are now, we're neutral. Okay, so that kind of fits in with the theme of churning. Now, if we get from zone 2 back into zone 1, that would be relative strength, and we have a situation where there is a dip in the uptrend over here. And what we can do just to examine that a little further is take a look at the hourly. All right, so on the hourly chart, we actually have some bullish developments here. We've got the exponential moving averages moving into bullish formation. That's where the green 5-hour exponential moving average has moved above the 10-hour orange exponential moving average. And we're developing some angle and separation there. And you can see that the RSI is moved above 50, so there's an underlying positive momentum. Now, the obvious question is, well, how much power is there behind this current bullish crossover, and will we get a swing? Is there something happening here that is exploitable, something that we can take advantage of? And that really comes down to the sustained momentum. If we get the stochastic staying above the 70 and holding, okay, then there's most likely going to be enough power to swing. You can see the last time we went above 70 and it held, well, there was the swing. Okay, so now that's exactly it. We've just crossed above 70, and if we hold there, then there is going to be some something that we can potentially work with. And if we are maintaining above 70 on the hourly, then the daily might recover zone 1. And if we recover zone 1, that's the dip in the uptrend. It might give us indication of the next leg up on the DAX, but we'll have to just wait and see if that's the case and confirm. Okay, thanks very much for joining me. And what I'll do is invite you to the next video. Thanks very much, guys.